I didn't see you guys coming, but let's dive into it. So in this video, we're going to talk about Fibonacci retracement, go in depth, such as who is Fibonacci, why did he create the Fibonacci retracement tool, how come did all this come about, and how we can use the Fibonacci retracement tool on how to take trades and make profit off of that. So we're going to cover all that in this particular video. Speaking about Fibonacci, you always don't forget to subscribe to the channel, and he never forgets to hit the like button. Leonard of Pisa, aka Fibonacci, is a mathematician and has impacted a lot in the mathematics world. So if you're a college student, I hope if I'm saying Fibonacci sequence is not a new thing to you. I hope. Anyway, that is only if you didn't miss a mathematics class. So for those of us that is just hearing it for the first time, Fibonacci sequence is a famous mathematics formula in which each number in the sequence is added with two numbers that precede it. I know you're probably wondering how come maths entered into trading. I don't know, I don't just know, but as far as it can be able to make us profit, come on, we use Fibonacci, baby. Enough of the maths. I know most of us are getting sick. Why? Okay, so we're going to talk about how it relates to trading. So remember, in a market trend, the market does not move up just like that. If you understand what I mean, the market moves up, retraces, moves up, retraces. So what we're going to use the Fibonacci retracement tool is to find when the retracement is happening, or at a certain point where the Fibonacci might happen. I know you're probably wondering, what is Fibonacci retracement? Fibonacci retracements are horizontal lines of levels which indicate support and resistance in which the price can possibly be reversed or continue from. The Fibonacci retracement works perfectly in a trending market. So basically, you can't use the Fibonacci retracement in a consolidation, and as you all know, consolidation is not even the best time to trade markets. When you see consolidation, you take your bag and leave the market immediately. One of the major mistakes that I found in traders is that they actually only use the Fibonacci retracement tool. But in my own opinion, I don't think you have to use it alone, but you can couple it with other indicators. Like with this strategy that I've shared here, you can couple, and this strategy, so you can couple them together in order for you to get the best out of it. Like using the Fibonacci retracement tool together with the moving average. That's the best I would say, using the Fibonacci retracement tool with the moving average. Right at this moment now, I want to show you guys a strategy that you can use with the Fibonacci retracement tool. And yes, I'm going to show you how to use it in the best way to get the profit that you want. Or if you're not yet profitable, this will help you to get you to the point of profitability in your forex journey. So let's move on to the charts right now. But just before you subscribe. So basically in this video, I'm going to show you guys how you can use the Fibonacci to find entries and exits in the market, and also do is more like a strategy. So basically what I'm going to do is that, you remember when I said you don't need to use the Fibonacci alone, you have to back it up with other indicators to get confluence in the market. So in this strategy that I'm giving you guys now, we're going to be using the moving average for this. And for those people that have been watching my content and those people that have been watching some of my videos, they know there's a strategy that I stick to, which is a specific number in the moving average. But just because but for the sake of the new viewers, we're going to include those numbers, crunch those numbers, and put it in our moving average before we start uploading our Fibonacci. But first, I want to start off by explaining the fibs. So I want to start off by explaining the numbers on the fibs. So let me just delete this. Okay, so let's go to a clean chart. Okay, then let's pull this up. Okay, now I want to explain the Fibonacci retracement. So I know you're seeing something like 100%, 78.6%, 61.8%, 50% here, 38.2%, 23.6%, and 0%. So these percentages that you're seeing here, and you could even see 161.8%. So this percentage is the percentage in terms of retracement. So let me see, price took off, then retraces to it retraces 50%, or it retraces 38%, or it retraces 23%, or any percentage that is in there. So I want you guys to take these percentages as retracement in percentage. That's what the Fibonacci retracement is all about. But like I said, you don't have to use this alone. So I'm going to upload the moving average numbers and get that on our screen. So for those people that are using Tradingview for the first time, or if you've not yet started using Tradingview, but you want to start using Tradingview, so let me just add everything. But I've already added this to my favorites. The moving average is right in my favorite, but I'll still add it back again. So moving average, what you want to do is that you want to add it twice. So add the moving average twice, then go to the settings in the moving average. You need to tweak some things here. So default setting on Tradingview comes with a 9 ball. You have to change this. The first one has to be 20, so just change it to 20. Okay, then you can change style, make the style to be red. Make it red, make it a bit more visible for you to see. And yes, we're done with this. Okay, then the second, go over to the settings there, impute, but this imputes the length here is going to be 25, so you have to increase that to be 25. Then the style, you just have to make it yellow and increase the thickness so that you can be able to see it well. So this is it. Okay, let me just hit the OK. So this is it. Anybody that knows this, anybody that have been following my channel knows this strategy. So yeah, so what we're going to be doing is that we're going to be backing it up with this one. So now, how do we use the Fibonacci retracement? We use the Fibonacci retracement at the beginning of a trend. So you have to draw your fib level. When I mean fib, I mean Fibonacci level, from the beginning or from the start of the trend. So where is the beginning? Okay, for those people that have been on my channel, you know that once there is a crossover like this, the trend is changing. So the red was above the yellow moving average, so this is a sign for a buy. So that's what happened here. So a bullish market came in play in GBPUSD as of this time. But now, where is the main start of this of the trend? The main start of the trend before this whole crossover here happened was this point here. You see that? So this is the point we are going to take into consideration when we are plotting our fib level. So that's what we are going to do now. So we're going to plot in our fib level here. So okay, so plot it and extend it to the recent high of the market. I don't care, just find a way to put it at the recent high of the market. So I would love to extend this so I will have a better view of it. So as you can see, now I want to make an explanation here. So I'll be using this brush. I'll be using the brush for it. So I want you guys to take notes. Of this. Take note of this reaction that happened here. The reaction that happened here. Same to this. Sorry if my drawing is bad, but same to this reaction, and this reaction. If you find one thing common about this, is that all these retracements that happened here are happening on the fib level. So you can see we plotted it right from the beginning, which is the 100% level. Price did not have any retracement till it got to the 50%. So from the 50%, price had to bounce back. I need to make use of a part stuff here. So you can see how price moved. It got to the 50%, retraced back to the 61.8%, break that level, went to the 38.2%, had to retrace to the 50.0%, same thing. So same thing, that was likely, but in this case this one didn't get to the 38.8. but if it had got to the 38.8, this is a clean place to enter the market. So you see price also broke that level high, and that is the same pattern that is happening here. So this is real-time market, this is real live market. So if you're watching this video as some video or anything, but this is August, so you can take this as a live analysis also, but this is more like a strategy producing, but it's showing you guys. So you could see that price is already at the 23.6% at this point. So what we are expecting in this level is that price should break this level and continue. You understand what I mean? Then you continue plotting your fib level. So now I've said all this, but how can we use it to find entries and exits in the market? So now what you have to do is that these fibs make it easy for us to find levels in the market. I'll have to draw that back. So okay, plotted this level here. So imagine that a new trend just started, and you didn't enter the trend right from the start. So what you would love to do is to enter the trend in terms of the retracement. So when is the best time to enter? When price has gotten to the 61.8, continue, and you hold your trades till the moving average is still continue telling you to hold your trade. Remember the moving average strategy. I don't want to you remember the moving average strategy. Or maybe you were not at this point in the market. I have to use this brush. So maybe you miss this point in the market. Where is the next place you can enter? You know that 38.2% is a psychological level in the market, and you can look at, that if price were to drop down or to retrace, it has to retrace to the 50.0%. You understand? It has to retrace to the 50.0% for you to get back into that entry. You miss this zone. The Fibonacci is telling you, giving you points and zone where you can enter the market. And yes, if you want to hold your trades longer with it, you can. The moving average is also giving you a confluence to hold your trades longer. So that's for this video, guys. If you did love this video, make sure you give it a thumbs up, and yes, please don't forget to subscribe if you want more educational content like this. And yes, with that being said, man, you know what I do. I'm out.